Well, hello traders and investors. I'm LA Little and this is your daily NeoTA wrap. We take a look at these markets, doing it from a neoclassical perspective, and that means each time we're asking ourselves what happened today, what does it tell us about the coming days. We do that every day. We use what the market gives us, right? What it tells us. And it tells us things. It tells us things at key points. And those things we can use to make decisions. We do this 4 times a week, every Monday through Thursday, broadcast at or before 10 o'clock Eastern Time, archived on YouTube and under the channel LA Little. And let's take a look at the, first let's start with the numbers, then I'm going to come back to the site. Right across the board, right? A little bit, well, I shouldn't say a little bit. Russell was down 1%. You had about 0.5% on the NASDAQ, broad NASDAQ, and a little bit less, just over 0.25% on the S&P 500. Bonds got a little bit of a rally. Oil also rallies a bit more. Gold, silver mixed with gold up. Dollar was down today. It's been up heavy, as we know. Right, we got a big sell-off. I wouldn't say a big sell-off, but we got 1% down over in Europe and also over in Asia. Now, I'm going to come back to the site. You know, I do that monologue at the beginning of the show, and I say, hey, you know, you can use what the market tells you to make decisions. And this was comments I put out, you know, every morning I do comments to the users. It's a recap of what's happened and what we should expect. And when we look at here, we had that weak bounce. It was sold yesterday. So it got near resistance, right? I've talked about these price points even on these shows. And I tell you, you know, here's what's happening. And what's happening, you know, many times can give you an edge. You had this big volume bar. I kept telling you that you had a range up here. Well, once you break under that, that's the dividing line between the upper range and the lower range, right? You got a range up here, right? And then you got one up underneath it. And when you break down underneath one, right, typically you're going to try to go test the bottom of it. And as we bounced yesterday, what used to be support now becomes resistance. That's classical TA. Why did I pick out this bar? I mean, I could have picked a bunch of bars. The most important thing in neoclassical is being able to say to yourself, this bar is important. And I know that most of you that watch this show don't understand what neoclassical, what the model's all about. I understand that that's the case. But you know, folks, there was a key bar over here. It lined up with this bar. This bar had the volume. That became the significant bar. And the market kept telling us it was significant. That's how you know. And when something like that happens, right, you get a break of that bar, you know it's going to be difficult. In other words, the landscape has changed. When the landscape changed, you got to do something with respect to that. You got to pick out what's important next. The market's giving you some information. It gave you information on this break. As you came back, that was the key place to sell. You know, personally, I shorted the market on that bounce yesterday. That's what you have to do as a trader. And if we go down here, that's the zones I was talking about. And I talked about the bottom of the range. Now, I pointed out things to members before, previously, and I brought those numbers back up and I said, you know, today this is where you should expect this market to try to trade to. If it does get lower, that's the places you ought to expect to turn. And I misspoke last night. I talked about the 2085 number. I did those calculations on the ABCD early this morning. 2105, 2106 roughly was the number. So anywhere from 2116 down to 2106 was the area that one should expect this thing to try and bounce. I showed it on the chart to subscribers prior to the market open this morning, telling them where they want to look for the turn. When what happens? Let's go to the charts. And I've got the SMI. Let me go over to, I was looking at world markets before I came on. Let me go to the S&P 500 and let's look at that together and then we'll move on to these others. So remember those numbers I just pointed out. And what happens today? Well, it goes right down to those numbers just where you'd expect. Those numbers, to recite them one more time, 2116 was the top, 2106 was the bottom. Where does it get to? 2114, 2115 roughly. So you get into the 2116, you flip it around, you come roaring back, right? Is this market out of the woods? Well, not quite. Did it do what it was supposed to? Yeah, it did. Did it give you more information? Yes, it did. And that information is what you always are interpreting, because you use that to make your next set of decisions about what to do. You test the swing point low, you look at the volumes there, you look at the volumes here, you see how it traded into it, what it did. What happened, folks? Sellers walked away. They didn't want to sell at lower and lower prices. This thing wants to bounce, and it wants to go test this area again, right? That's what it's going to try and do. If it gets back over it, then you're range trading in the top. If it stays inside of it, if it fails here, you can expect it to try to trade back down again. That's what the market's telling you tonight. It's what it told you today. And if you were smart and you saw this thing hold in reverse and start inching up, you cover your shorts that you took out on the bounce, you make your money, and you wait for your next trade. That's neoclassical, folks. It's over and over. It happens over and over. I've been mentoring people, and the mentors have been mentoring others. It's been a great success. We're doing that at TA today. You know, we've got the site closed right now. You can't join it even if you want to. At some point, we're going to open it back up with a different model. And that model is going to enhance what we're doing with those people that are members and those that want to join and become members. So if you're interested, you can pop an email to me. You can get that at the site. It's pretty easy to do. Just pop over there. Let me grab this. Come to the site. It's right on the front page. If you go to the Get Started, you'll see that the site is closed right here, but you can email support. So if you want to do that, go ahead. Let's look at the rest of the market. So we got the S&P doing the bounce thing, right? Now we're probably going to, we're going to thrash a little bit. Don't expect this market just to roar back up. And I've seen enough V-shaped bottoms in my life, in my last 5 or 6 years, to believe that they can happen at any point, and they happen with frequency. I don't know that I expect V-shaped bottoms, but I do respect that they can happen. We've seen them over and over. I mean, the most recent one is here. Last time we did a thing down, we went right back up. Now, this one's a little bit different because we're at a different stage in the market then. But we've got another potential. This is the NASDAQ I'm looking at. You got another potential, trade down, trade back up scenario. So what's the NASDAQ do? Let's look at it. Now, the reason I say expect some thrashing is because the NASDAQ is flashing some different signals. First of all, is you broke under, you held under swing point highs, and we're on the daily. And you've done it on 2 sets, right? Those should have held. They didn't. That says that, anytime you see this kind of stuff where you do a bullish retest, regenerate, you come back in, that tells you the trend that was this way no longer is that way. It's more like this for now. And that was true back here. It's also true now. And so you have to expect this market to thrash some as a result of the trend changing on this time frame. That's the NASDAQ on the daily. Now, if you pull over the weekly, it's a different story. Because on the weekly, the swing point high is back here. It has tested it once. It has touched into it again this time. That's the second test. In neoclassical, we have probabilities associated with all these things. And you can use those probabilities to give you advantages in terms of what to do. And so on the second test like this, the probabilities go down that it's going to bounce and that you'll probably get a deeper retrace. Now, this isn't the market that I would be as concerned about. I think the S&P is the one. The S&P is broader and the S&P has been weaker, so that's where we should be watching. But it does give you information. Let's look at the NDX. Now, the NDX, of course, has been the strongest of all the indexes. And let's see what it did, right? Remember, we had those 3 retest regens on it. What does it do? It's underneath them. So on this time frame, again, telling you to expect this market to thrash some. It's probably not going to go straight back up, at least not immediately. If you look at it on the weekly, The high over here on that bullish retest region, 4739. We come into 4803, so we didn't quite get into it yet. That's an important thing to watch. Now the Russell was the weakest today, has been the weakest the last few days. The Russell is a mess, right? Because you had a bullish retest region here that failed. You come back up, set a new high. Now you're coming down, and you're coming into an area that has volume on it, right? Here's that same bar that we've been looking at on the S&P 500. This is it here on the Russell. So now you're up underneath it, and you haven't tested the low on the Russell yet, and that low is down here, right? And so the Russell is not the leader, it's the laggard, and at this point Russell is just saying, hey, I'm thrashing in this area, right? I don't really know what I want to do. Now if we flip over and look at the Russell on the weekly, it looks different, and they all do, and that's because they're all pretty strong. The bullish retest region here is the one you really should be watching. If you go and get the numbers off of it, 1205, 88, you got down to 1206, so you haven't tested into it. You did test into it once here. Now you're coming back to try and test again. And so the Russell, even though it's not giving us a great signals yet, the Russell is one to watch on a weekly time frame. Tomorrow's Friday. Tomorrow's going to end the week. Tomorrow we could get another push down potentially, right? Because we've got a big sector that's going to report tomorrow, and that's where your eyeballs need to be peeled. I'm going to go to that sector real quick, and that's the XLF. You've got three names coming out in the morning, one of them being Wells Fargo, which has been totally beaten up. And let me grab this, the major sectors. Here it is. So today you get a volume push, a big hammer reversal type move, but you're back inside this kind of congestion area. What I would do is go to the weekly and look at it. This is the key bar. It's your retest region on this time frame. And so if I draw the square around it, get the little rectangle, right? You don't want to see this break the bottom side. This is the key trade tomorrow. If you look at it, where this low is happens to be where all this volume is located as well. That's going to offer a lot of support. It has to hold this area. If it gets up underneath it into here, that's a failure on the weekly time frame, and we're not going to see a baton switch from the technology to the financials. And if you were watching earlier this week, I talked about this is the go-to sector if we're going to see another sector step up. If we look at the stocks inside of it real quick, and I'm going to look at them on the weekly time frame. Here's Wells Fargo, hugging the lows, right? Volume escalation as you get into it. Did get a little reversal. It's coming back down to test. I wouldn't be surprised to see this try and hold. If I pull over the monthly, you got a trend change with volume. And you got the test going on right now of that volume. Again, I wouldn't be surprised to see this hold and get some sort of a bounce. That's Wells Fargo. Another name tomorrow, JP Morgan. JP Morgan's sitting on the highs, right? So you get on the highs on a daily time frame, comes back in to do a test of those highs, right? Bullish retest regen and holds. That's a good sign, right? So you do a full retest regen, which is what you expect in the model after less than 6 bars. And then if you go on a weekly basis, right, this thing has been up there trying to break the highs, did get over it last week, doing an immediate retest regen. Usually when you do that, you can get it deeper retrace right into the bottom third. If we do that bar, it's a wide price spread bar, that says you could trade back into this area. And so this is a kind of a key test on JP Morgan. If this just starts to take off, it tells you it's a lot stronger than you think because it doesn't retrace as much as it should. I like the way this one's set up as well. If we look at Citigroup, which is the other one tomorrow, I believe it's Citi. It's either Bank of America and Citi. I think it's Citi. Citi's doing a bullish retest regen as well, coming into both of these, also set up well. So if I look at the 3 financials tomorrow, they're set up pretty good. If they do push higher, and that XLF pushes higher, then you can expect the S&P to charge back up there and test that 2146 area. That's where we're at. I've got one stock here I was asked to take a look at. Yeah, so let's take a quick look at it. And bear with me just a second. And here we go. So it's IAC. And so the question is should I be trying to buy this on this retrace? Well, it's giving you long tails. That's a good sign. It has come back into the bullish retest region, 61.25. Got into it here. Coming back into it today. That's two tests now. You really want to see this thing motor back to the north. If you're going to buy it, this is not a bad place to buy it as it comes in and does this test. Volume's kind of low. It looks good on the daily. Come to the weekly, you got resistance. Why do you look at this? So let's quickly just point these out. Look at these bars here. Look at the tails that are there. Look at the price point. Now it's traded into them and just got over them. It's holding over them right now. But the thing is you've got a lot of resistance in this area, and you're coming back to do a bearish retest regenerate on this time frame. And so as you come into that area, there's supply there. And you can see that supply even more clearly if you move over to the monthly. Because anybody that bought anywhere in this time frame is underwater. So 2014 to 2016, 2 years of people that are now underwater and have been for some period of time. Those people are natural sellers because everybody wants to get out for even. So as you come back into this price point, right, that's what's happening. You're getting that supply line pushing against price. If you're going to take this trade, I think I'd be careful. I'd probably let it try to retrace before I did. And so if I go back and pull up the daily again, where you would like to see this retrace is to do a larger test on this swing point high, maybe come back into the bottom of it, which is the top of this bar around 60. That would be the ideal place probably to think about it on a longer term basis. I don't know that I would probably buy it just yet. If it holds at this price long enough, then you can buy it. But 3 weeks, I would want to see it do it 5 or 6 probably, and then maybe it makes sense. In other words, on a weekly basis, let it consolidate like it did here after this push up. Let it consolidate up here, do the same thing. And then, if it's still holding, then you find a place to weasel into it somewhere for an expectation of another push. That's it for tonight, folks. Thanks for joining me. Have a great one. I'll see you next time. Good night.